Hi everyone, welcome to the Buffett and Beyond Research Stock Letter, and today we're going over a stock in the restaurant business, and it has been in the news for the past couple of weeks relative to a decorating policy. But anyway, it's Starbucks, and we all know what Starbucks is and what it does. And remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. Well, folks, we know what Starbucks does. It's the leading retailer, roaster, and brand of specialty coffee in the world. Sells whole beans coffee through its specialty sales group, mail order business, supermarkets, and online. Had over 10,000 company-owned stores in the Americas and 8,000 elsewhere. Also had 17,458 licensed stores worldwide. Food and beverage, 96% of total. And it has joint ventures with Pepsi-Cola and Dryers to develop bottled coffee drinks and ice creams, respectively, and has about 402,000 employees. Folks, that's almost 500,000 employees. So let's look at the quick numbers, the quick chart before we get into in-depth a little bit. And folks, the blue vertical lines represent the average statistics for the 1,800 stocks we have in our database. And folks, you can get free 2-week access to that database at the end, and we'll tell you all about it. But meanwhile, here we are. The average stocks are in blue, and the green stocks are Starbucks statistics, and we're looking at 5-year averages. So all the way over here on the left, the average stock has about a 13.5% return on equity. And think of your bank accounts, folks. It can be that simple, and that's what the computer program does for us. It simplifies things. So think of a bank account, average stock, which is giving you a 13.5%. And then when you look at bank account Starbucks, 23.7%, so close to double the average stock out there. Now, net income, how much are the earnings bringing in? And these are clean surplus earnings, which are different than traditional accounting earnings, because clean surplus earnings are comparable among all the stocks, even in different industries. Average stock, about 13% per year. Starbucks, and this is over a 5-year average, Starbucks 29%. More than double the average stock. So in other words, we have a stock here that is giving you a better return on equity over here, almost twice as much. And when it comes to how much is it earning a year on average, more than double the average stock. Now, how about revenue? How much money is it actually bringing in before all the expenses are paid, and then the rest goes to the bottom line? Average stock about 7.1%. Starbucks almost double that at 12.4%. So these initial numbers look very, very, very good for Starbucks. So let's look at some numbers, and this gets a little bit more into depth. We're looking at the net income. So now we're looking at yearly numbers, and you can see that projected for 2024, it is making more than it ever made before. So we're looking at that $4.10. That is causing the return on equity to go up over the past 3 years when you count 2024. That means the earnings are growing, but they're growing at an accelerating rate, which is very, very good. Now, and the market likes it very, very much. That's why the stock is going up more than the average stock. Retention rate is about 40% for 2024, 36% for this year, 2023. Now, what's the retention rate? The retention rate is how much money the company is making and putting it back into itself in order to grow. For a good growth stock, we want to see retention rate of 100%. We're talking about stocks like Chipotle, some NVIDIA, some of those stocks out there. We want to see 100%. But Starbucks has expanded all over the place, and it feels like it can only grow at, say, half the rate that it used to grow. So the retention rate is about half that. So it's not a pure growth stock anymore, but it's certainly doing better than the average stock. And remember, 96% of professional money managers out there, the folks who run the publicly traded mutual funds, we can follow them on a daily basis. 96% of those folks out there cannot outperform the S&P 500 over any 10-year period. And here's a stock, Starbucks, that is actually doing that. Now, the net income growth Remember, we talked about the net income growth for the average stock? Well, the average over 5 years is 29% for Starbucks, and revenue growth above average. Years to pay debt, this is if a company takes all the money it's making and uses it to pay debt. How many years will it take to pay off that debt? 2.9 here. Now, for Buffett, he wants to see a stock that can pay its debt off in 5 years or less. We like 3 years or less, and Starbucks is right there. Dividend 2%, and that dividend's growing nicely, by the way. So, as far as a pure growth stock, Starbucks has seen its growth days. However, it is still returning way more than the average stock. How do we know that? Right here. The black line is the S&P 500. We're looking at the past 1 year, so the past 12 months. Starbucks is this yellowish mustard-colored line growing at 30, or has grown in stock appreciation at almost 30%, while the market is about 15%. So it's growing faster than the average stock out there by about double. Then when we look at 5 years, we see the market up about 60%, black line again, and here we have Starbucks at 100%. So it's growing in price appreciation almost double the average stock out there. So the black line is considered the average stock, and the average stock in our database also. And Starbucks is still growing, even though it's putting half of the money it makes into the dividend, half the money it makes back into its own company in order to grow. It is still outperforming the S&P 500 by about double, and the numbers are supporting that. So they are supporting what we see on the graphs about the growth of Starbucks, or the price appreciation of Starbucks. It is growing twice as fast as the average stock up there. So folks, Starbucks is a pretty good company. So just to reiterate again, you can get a free 2-week subscription, which include the archive of all past videos, access to the computer program, which we talk about on here, and this is where we get our numbers, of course, and the daily market letter. Yes, there's a daily market letter that we put out for professionals out there, and if you're watching this, you can get a free 2-week subscription. Just go to this place down here, BuffettandBeyond.com. Buffett is spelled with 2 F's and 2 T's, all one word, BuffettandBeyond.com. All right, folks, just remember, if you want to live on this beach like Jimmy Buffett, you have got to learn how to invest even better than Warren Buffett.